Hello, everyone, and welcome to the CPA Lady Podcast. My name is Marjorie McPike, and I am your host. The CPA Lady Podcast is a platform for us to share accounting, tax, generational wealth, estate planning information with individuals such as yourself, small business owners, entrepreneurs, and anyone that is looking to gain more information in their financial area. I have with me today Jovan Johnson from Peace of Wealth Planning. I'm sorry, Peace of Wealth Planning, right? I was gonna say financial, Peace of Wealth Planning in Atlanta, Georgia. So Jovan, would you tell us a little bit more about yourself and what it is that you offer in your firm?
Oh, thank you so much for having me on the podcast. This is exciting. I am, very excited. I am a nerd and geek when it comes to personal finance and accounting. So I think that gives it a sweet blend. So basically, my firm focuses on, we work with individuals kind of on a long-term basis where we kind of create a roadmap, a financial plan based on their current situation. And I kind of help them navigate through that plan. So for example, that includes estate planning, that includes insurance planning, tax planning. So we just kind of create that roadmap of, you say you want, these are your goals. This is where you want to be in the next 5, 10, 15, 20 years. Okay, these are your goals. How do we get there? So we create that roadmap. And then we, of course, work together because we know life happens. There are tweaks, there are road bumps that happens. And I help them get over those humps and get through to those goals to get to the other side of happiness, retirement, and peace.
Yes, I like it that you said roadmap, because I'm hearing
Roadmap.
that a lot. I'm actually working on something. I'm always plugging that. I'm working on something that's a roadmap for digital business owners and their accounting and taxes. So I like roadmap and how do you get to that end point? So do you guys, I'm assuming that you start with the end in mind.
You start with the end in mind, and I love to attach a number to it. Of course, it's very subjective, but I think it's helpful to have a number to it because you can back into that to say what is required of me today, get me to where I need to be based on a number that of course is inflation adjusted, all those type of things. But I like to pick a number.
Mm-hmm. So the number, is it like the total amount, or is it the amount that they feel they need per month or per year? Or how's that number?
So I make assumptions based on kind of client driven. So I say, hey, are you okay with how you're living today? If they say yes, I create that number based on, their income or expenses they're, spending or making today. And I inflate that I kind of assume a life expectancy up to like 90 to age 95. So basically I say, is your life good now? If so, I will make those assumptions based on what you're making today. If they want their retirement to be more lavish, then I'm going to say, okay, we need to inflate those numbers. So if you're making 50 grand this year and you say in retirement you want to make 100 grand, that number is going to be much bigger.
Much bigger, right? And so then you have to create a plan. So the plan, I'm assuming that it includes like 401k, other investments. Do you include like the house in there?
Houses, everything, Medicare, all those, there's so many pieces to it that people don't know about retirement. So security is just a lot of pieces that you have to factor to help them get to that number, or at least, around that number.
Wow. So do you find that people are, so is it easy for someone to come and talk to you, or do you find that you have to do more educating or kind of reining them in order to get them to come in and talk to you?
Oh yeah, definitely more educational. Because of course there's a big fear when it comes to seeking out an advisor, or let me say a financial planner. Because in the past, advisors were just like, let me manage your money. That was the relationship. That was it. But now you have a new thing called a financial planner, where it's more like, no, not. I mean, yes, I'm going to manage your money, but I also want to help you achieve your life goals. So I think it's just more educational component, helping people understand how their 401k works, how these things work. They have many tools right there in their face,
Right.
but they just need the help to, utilize those tools.
That's interesting. My wheels are turning here. So a financial planner. So do you do the budgeting piece, or do you just look at the other parts of it after they've already established their budget?
I would say as a planner, of course, you have different planners. Some planners are more like, I only want to deal with millionaires that are already in their prime. But then you have some planners that are like, they work with everyday individuals where, yeah, we can help them with their budget.
Mhm.
and we kind of figure out, how much can they invest per month, or let's take care of this debt first. So they really go back to step one. Let's create this budget.
Okay. I like that. And you do all of that. So the sweet spot of the client that you're working with these days?
I think for me, I figured out for me personally is I love working with clients that are number one, they're willing to learn,
Mhm.
adapt, and grow. Those clients I find, the most fun to work with, where they're excited to have those conversations with me, learn how to use the 401k, all of that. And then number two, kind of have a service mindset. So I
Mm,
typically love working with doctors, nurses, the medical field, educators, nonprofit professionals, professors, people that typically are more inclined to give back and want to serve and volunteer.
mhm.
So typically, I think this is more on the personal side. There's a better fit personality wise. It's
Okay.
nothing to do with, income or numbers. It's more of a personal fit.
Personality thing. Okay,
Mhm.
that makes sense because you want to have someone that you can relate to when you're talking about your money,
Mhm.
right?
Very personal, right?
It's
Very
personal.
personal.
Okay. So I noticed that it says that you are a fee-only financial planner. So what exactly does that mean?
That only means that I do not accept any commissions or any back end fees. There are no hidden fees. So, for example, when you sign the contract, if I say you're going to pay $200 per month, that's it. There's no other fees wrapped in or anything like that.
Mm,
Versus if somebody is not a fee only planner, they don't have to tell you or notify you of all their fees. That's the hard
okay. Okay. So their fees would be based on, say, like the value of your portfolio.
Yeah, they can have those fees. They can have per trade fees. They can have so many different fees that the client wouldn't know.
Hmm.
They would not even know.
Interesting. But yours are it's just this is the flat fee and this is what you pay going forward.
That's it.
Okay.
Nothing
And you
else.
do planning and advising.
Yes.
Okay. Very cool. So what's it like to come and work with you? And then we'll kind of go to the other one. So do you have like a step-by-step process that you go through, or how does that work?
So I would say, yeah, it's kind of like a step by step. So I would say, honestly, the first year is always the most, heavy lifting because when we first work together, of course, we have to kind of get into the financial planning software. So I'm going to be asking them, probing them. I know this is the most annoying part for clients, but I have to probe them for data and documents because at the end of the day, it will make the process much easier. So I
Mm,
ask them for all the data, the documents that they can upload to the software. And then once
mhm,
they link everything, upload the documents, I can then create that full comprehensive financial plan and
mm,
present it to the client based on, are there any holes in your insurance products? I see you have a child in your will. Do you have a guardian? Things like that I can really assist with if they're, compliant with uploading the
uploading
documents.
the documents, right? So you have to be open and share that information, similar to with the CPA. It's like,
Mhm,
okay, so you purchased a vehicle for your business.
mhm.
Can I have that information? Oh, you formed an entity. Well, why didn't you tell me that? Right. So it's you have to have the information in order to move forward. So that's important.
Mm-hmm. Yeah, that's very important. And I think that makes the plan even better. And then
Hmm.
once they see the plan, like I said, I keep reminding them that we're not going to just tackle it all because it will be a little overwhelming. But I do think it's helpful for clients to see, okay, these are our ticket items. But then after the plan is presented, we kind of go section by section. So it's not overwhelming. We just kind of tackle based on priority,
Right.
except for tax season. Tax season, clients know once they sign on, it's all about taxes. We try to get those prepared, and then we go into the regular prioritization.
Okay. So do you do taxes as well?
Yes, for
Okay.
ongoing clients.
Oh, awesome. And you mentioned that you have an accounting background as well.
Oh yes,
Okay.
that's
Very cool. So then how did you switch from accounting to finance?
um. Honestly, I think when I got a taste of individual taxes
Hmm.
and learning more about investments, I think that's what kind of piqued the interest. And I joined the financial planning firm, and I was like, this is pretty cool because I think it was just more of an impactful on the individual level that I wanted. It's awesome to help corporate clients and all of that, but it was awesome to have that individual impact.
Right, right.
What about you? Are you in corporate accounting or
I do all. So
okay?
I do a so when I came out of public accounting in December, right?
Okay.
and when I was in public accounting, I did a lot of entities, and then I would do the business owners that flow through to them, and then some other individual returns. But it was a lot of entities, and so that's why I kind of focus on small business owners, because I've seen that side of it, but then also how it trickles down to the individual return, and wanting them now to know that you have to plan and be proactive in order to pay less taxes. So, and that's kind of my focus, is like, I like the bigger picture instead of, just the one individual tax return. It's like, it's bigger than that. It's bigger than just sitting down and preparing your tax return, and sending it in, is looking at everything that goes around it and how you can make changes. So
That's true.
yeah.
No, you're right. I think that's what people want to hear. How do I save on taxes?
How do I save money on taxes? Yeah. How do you save money on taxes? And it's not just on filing your tax return by April 15th, right?
Exactly.
Working with professionals beforehand. So awesome. So let's talk about charitable giving, and because you mentioned something about estate planning. So kind of how do you get into all of that, and what do you want to share regarding charitable giving?
I think the biggest thing is for, well, I'm going to speak for more of the everyday client, because of course, millionaire complex clients requires different things. But for the everyday client that, somebody that you attend church with, these are very viable options that they don't know about. I mean, even my personal family, I just see them, come tax time, I prepare their taxes. I say, hey, did you give back? They say, yes, I gave to the church. I say, how much? They say, I don't know.
Right.
So it's just like, they don't understand that those are things you should be tracking along the way. So come tax time, you have that proof,
Right.
so you can write that off if you're itemizing your deductions. Or during COVID year, you could have still deducted up to, what was it, $300?
$300.
$300. So my thing is donor advised fund, because that is the most simplistic way for almost everyday individuals to give in an organized manner. And you get that deduction once you fund the account. You don't even have to donate to the organization yet. As long as you get the deduction up front once you fund the account. And then, of course, you can give it out. Right now, there are no rules. So you can give it out 20 years later if you wanted to. So a lot of clients see a benefit in maybe in a year where you're close to itemizing. You can cut your deductions and do a lump sum contribution to the donor advised fund, itemize that year. Then the following year, just do the standard deduction, don't fund the, Yeah, so I think there's a strategy when it comes to that. But to me, the biggest piece is the organization, because the DAF, typically, if you go with the custodian like Schwab, they will handle that processing. So you say, hey, I want to give to X church every month. They will handle that end of it.
Oh, I like it. And you know what? And I probably know that about a donor advised fund. I just never really, dug into it that much. But that's very cool. So like a tax planning strategy. So if someone has, significant income this year, you can contribute to the donor advised fund. And that's through one of the intermediaries like Schwab.
Yep.
And then you tell them where you want the money to go. Interesting.
Yeah, I think everybody should. Personally, I don't see why every family doesn't have one. I definitely recommend it. If you give a lot, I recommend it to every family. It's very efficient to set up. And then, of course, on top of that, I mean, this is for the next level of clients, but if you're at a great place, you can actually use it as an investment account. It could be like a charitable investment account. So you can invest that money, make earnings, and give more to the charity. So,
but it all goes to the charity.
It all goes to the charity.
Because you're getting the tax deduction up front.
That's right.
Interesting. Okay. So what's required to set up a donor advised fund?
The biggest thing is based on a custodian. I think Schwab, there is like a small, minimum balance that's required. Maybe, I haven't checked lately, but maybe $5,000. So there's like an initial, minimum balance. But after that, there doesn't have to be any minimum balance after it's initially funded. And then I think going forward, you can make monthly contributions as small as, not monthly contributions, but you can kind of, give to charities, I think as small as $50 or so. But yeah, I think it's just like a minimum balance once you fund it initially, but that's all. It's really easy to set up. There are no costs to you. If you invest, of course, there's going to be typical trading fees or fund fees, but that's expected.
Okay. So then you also mentioned about appreciated securities, which that was something that I posted about a while ago. Yeah. So you want to touch on that one?
Oh yeah, like this is the hidden, especially with the Bitcoin, the crypto stuff that just happened when they were, up super high. I think the biggest thing with that is people don't understand that, that's potentially a double tax benefit. Because it's just like, if you know that you're already going to be donating to these organizations,
right?
It's like, why would you utilize the cash if you have appreciated securities? Because essentially you can sell an appreciated security. Hopefully these were long-term, securities that you held for longer than a year.
Right.
So you would sell. Typically you would pay capital gains tax on whatever the gain was. But essentially, if you donate it or give that money into a donor advised fund, you avoid capital gain taxes on that gain. So that's step one.
Right.
Step two, if you itemize your deductions, you qualify for another tax deduction. So it just makes sense. A lot of cases, it makes sense to go that route instead of giving cash in a lot of cases.
Right. And people don't think about that. That's something that I was mentioning too, because like I mentioned, as people progress in age, then they start getting to the point where they're ready to retire, but not realizing that you can do different things with stocks that you have accumulated, which I've seen a lot of people do that. They give the stock or they transfer the stock into like I mentioned, a trust, and then they're getting a deduction and they're not having to pay the tax on it. So, okay.
Yeah, people don't get it because you do have, like you said, a lot of retirees typically they're faithful to organizations. So it's like, if you already know in your mind, monthly or every year I'm going to give around $20,000. That's why not, when you retire, you have this big investment account, sell some of that, avoid capital gains tax, get a tax deduction, and maybe upfront, $200,000 into a donor advised fund.
Right.
And then just give out of that over the next 10, 20 years.
20 years.
And then that 1 year you get the deduction, you could have wiped out almost any income tax, based on deduction.
Right. And then they could still be making money off of that too. Getting any of the interest that are actually going to go
you
there.
Can get more from it forever, possibly.
Yeah. Okay. I like it. So do you find small business owners that are doing anything like that, or do you have recommendations for small business owners?
I would say, I was going to say, it depends on how they're taxed, but I'm going to assume right now we're saying a flow through entity.
A flow through entity, right.
Okay, I would still go the route of a donor advised fund.
Okay.
But of course, like I said, if they're taxed at the CCorp, that's a different conversation. Right.
Because, okay, so let's talk CCorp. Because, well, I'm gonna say this. A lot of, like I mentioned, there are a lot of entrepreneurs. I do a lot on social media, so I see it. Instagram, digital products, people making $100,000 in a day.
Where are these people?
Things like that are happening. People go from, 0 to $1 million in a year, but you have no tax planning. You're not thinking about retirement. And a lot of times an entrepreneur isn't even thinking about that because they're just in the habit of, their mindset is making the money, right? They're not thinking, how do I save this money? How do I make sure that this is set aside for retirement, or how am I taxed on it less? So, so someone like that, what other retirement products do they have? So there is the 401k, you could do like a solo 401k. Do you do a lot with SEPs and Simples, the SEP and Simple IRAs?
Simples, no. I've never had to ever recommend a simple IRA, but SEPs, yes. I like SEPs for simplicity, but I do rank the solo 401k higher personally when it comes, if it's accessible, of course. If they have employees, then it's ruled out. But if you're, on your own, you have a small business, I like the solo better for a few reasons.
So may I ask the reasons?
Oh, no, of course. My favorite is, of course, there is a Roth option.
Okay, right.
There is no Roth option. That's number one. Number two, you can get a catch-up contribution once you reach over age 50 in a solo 401k, because there is that employee portion. You do not get that with SEP IRA.
Oh, okay.
Then number three, this doesn't really apply to many individuals, but there is potentially, you know how you can take a 401k loan, that also can apply to a solo 401k. SEP IRA is not.
Okay. Okay. And then with the solo 401k, you can do like a profit share as well.
Profit share.
So you can put aside that much more money, right?
So you can put, yeah, I mean, it's a big number.
A
lot of people don't know that. They think, I remember talking to many clients where they think, you know, you're limited to, like many clients that work for employers, they think they're limited to the match. So if it's a 6% match, they say, oh, that's all I can contribute. No, you can go way past that.
Yeah, you can contribute the maximum amount, right? Yeah, that's what I tell people the goal should be, you know, to contribute the maximum amount to the 401k. And then even if you can't do it all at once, but you just keep bumping it up, you know, it's like
1% a year. That's what I told you. Drop for 1% a year.
It's like, why take a 2% raise? That's not going to change anything, right?
No, that's like groceries. That's groceries.
Exactly. It's like, it's okay. Just put that in the 401k. So that's always my philosophy. So yeah.
Yeah, I love the solo. The solo is an awesome tool.
And that's kind of that's a recommendation that I have to people, especially as they start making, you know, they go from the LLC to wanting to do more because they're making more money, is to set up the S Corp and then do the 401k. And it's like, even if you're taking a salary and putting it all in the 401k, you know, it's better than nothing.
That, and it does, I mean, I don't want to get too complex with individuals, but if you have your own business and you choose the solo 401k of the SEP IRA, that also allows you to do the backdoor Roth IRA contributions as well. First, if you do a SEP, you are messing yourself up, because then you get into the what's the term, pro rata rules, where you could you will mess up base, you will blow up the plan if you do a SEP, the backdoor Roth IRA contributions.
Okay, so what's a backdoor Roth IRA contribution?
To put it in simple matters, it's for individuals that make too much money. When you make too much money, you cannot contribute to a Roth IRA directly. So to do a backdoor contribution, you would funnel non-tax deductible dollars into a traditional IRA, then convert it to the Roth IRA.
To the Roth IRA.
And preferably you want to do that process before that money earns any gains, because then again, you would kind of mess it up a little bit. So you want to, preferably, I would say, put the money in traditional IRA, sit it in cash, and then quickly convert that to the Roth.
Okay. Quickly. So is that like within the same year?
Preferably within the same year.
Preferably in the same year. Okay.
But yeah, like I said, the rules can be a little weird when it comes to the backdoor, because yeah, it's weird, because the conversion year is January through December, but the contribution to an IRA is from January to that following April.
The following April.
So it can get a little weird with the timing, but that's why I try to tell people, try to keep it in the same year for, you know, make it a little simple for the taxpayers, if they can.
That's something that I need to look into. Yeah.
Yeah, I think it's a great tool for people that they have no other way to get into a Roth, you know, get their dollars into a Roth account.
Right. Okay. Very cool. Very cool. So investing for the future. So when you mentioned that, you don't do recommendations as a financial planner, do you?
Oh no, I do make recommendations.
Okay. Okay. So do you have like your license, your 6 and 66, I believe they are?
Oh, I don't, if you have the CFP, you can make recommendations, you can manage portfolios. I think the 6, the only difference or additional thing would offer is I could directly sell securities. So I could, you know, right now I can trade for clients and all of that, but you know, it's a little different, but yeah, essentially I can do everything needed as an advisor. Okay.
So if someone was to come and work with your firm, they would be working directly with you?
Yes, that's correct.
Okay. All right. Very cool. Very cool. Let's talk about personal finance for millennials. That's a big one.
Oh yeah. Yeah.
Do you find I find that like I mentioned before, very proactive, very creative as far as generating revenue, making money, just doing different things. Do you find them being the same way when it comes to managing it and wanting to go to the next step, next level?
No, that is one gap that I'm hoping will close over time. But I just think the biggest thing is, like you said, they're learning how to make money in creative, brand new ways. Everybody's trying to be definitely on social media, get brand deals. They're finding new ways. But like you said, there's the gap in the managing piece. And I think there's a delay in, them taking retirement savings seriously. But I'm not sure if previous generations were the same because I wasn't around to see, the other generations, how they treated it. But maybe that's just how it works, where younger clients are just like, they don't want to think about, putting a lot of money towards retirement at the moment. They'd rather spend that money now to enjoy it and live a good life. But I think there's always the need for balance, because retirement will come. If you're lucky and blessed to be able to live that long, it will come.
It will come.
Or at least if you have kids, at least consider, them a little bit.
Right. So do you have a lot of clients that are younger, making a lot of money?
I do, but luckily the ones that come to me are the ones that are more like, okay, I want to save for retirement, plan for these big goals in life.
Okay. Do you do a lot of educating in that service? I know that you're big in community service and community involvement. So do you have like programs that you do related to personal finance and investing, financial planning?
So typically I am involved with like the Financial Planning Association of Georgia, where I do some pro bono activities. And typically I do just kind of one-off programs with like I'm projected to do something for government employees across the nation, just kind of different programs where I am, willing to do financial literacy presentations. And I just love doing those presentations for, like I said, these are more everyday individuals that are just trying, I think the most popular question that people ask is, should I pay off debt or invest? That's a very typical question people ask.
And what's your answer for that one? It depends.
It depends. I feel like that's the answer to everything, finance and money, and even accounting. I think it depends.
It depends. Everyone's situation is different, right?
Yeah, it depends.
It depends.
Can't give blanket advice, right?
Right. I like it. I had something else I was gonna just kind of lost that one. Sorry about that. So what piece of advice would you give to an entrepreneur, a middle-aged person that that they just kind of don't know where to go? They know they need to do something and they want to just make sure that they're on the right track.
I think the hardest part as an entrepreneur is it just takes a little bit more planning and a lot more risk management tools set in place. So I think for that, sounds like they would just need a plan set in place, making sure that all their bases are covered. I think the biggest thing is, if they have children, is everything set up correctly for the children? Are you insured? So if something was to happen to you, do you have disability insurance? If something you couldn't work anymore, would you still be getting income to take care of your family? Are you saving for retirement? Do you have any plans to get rid of your business in the future? Will you pass it down or will you sell it? I just think a lot of business owners don't consider that piece. Like at the end of the tunnel, what does that mean for your clients? Are they going to just be left looking crazy?
Right.
Will they still be served?
Right. That's very good. That's very good, because I don't think that people really look at that. It's more of the moment. This is what I'm doing now. This is what I'm doing now. I'm making money and I just keep doing it. So
making money.
But the insurance piece is huge. Yes. And then I hadn't even really considered the disability insurance, because like you said, what if something happens to you and you can't generate the income? But I guess for a lot of them, it's done electronically. So it's not like they have to physically go out and do something or physically go to a job.
That's fair. That's true.
Maybe that's kind of where that.
I still recommend it, because like I said, if you get, I don't know, brain, can't, something happens with your brain, you can't function. You still want to make income to take care of your family and pay bills and medical bills.
Right. I agree. So what tip would you leave for someone I like what you're doing. I'm like, I need to sit down and make sure that all my stuff is in order.
I need one too. I need my own financial planner as well.
You need your own financial planner?
Oh yeah, a lot of financial planners have financial planners because it's easy to be independent for
Right.
somebody else, but to be independent for yourself is very hard.
That's good.
Very subjective.
That's what I tell people. It's like if I had somebody that would just sit here and, how we always say, keep track of your expenses and your personal finances and all that. It's like when it comes to mine, it's like I don't want to look at the computer.
Exactly. You're tired after looking at everybody else.
It's like I've done that over here. It's like somebody just do it for me.
Exactly.
It's okay. Tell me what I can spend and what I can't spend. I can handle it.
Yes. It's like the greatest feeling when you have somebody that's just like, they tell you like, hey, do this, do that, you'll be fine. I'm okay.
Okay, yeah.
Whatever.
It's like I don't have to think for me. I think for other people, so just come in and take over. So that makes me feel good. I feel like I'm in good company.
Oh yeah, no, I feel like we all feel that way. It's hard.
It is hard. So very cool. I like what you're doing. I like the financial literacy piece. I think that that's huge. I think, there are a lot of people that are actually trying to educate, and I can say it, the African American community, because we are always underserved in that area. And I like, another thing I say is that we are very hard workers. We're very, we're going to go to work. We're going to do our job. We're going to make money. We just have to take the time to know how to make the money work for us and how to make it benefit for us. So I applaud you for that. I love what you're doing. We need more. So
I agree. Yeah, we need more to cover all areas, from the financial coaching to the advising. We just need from elementary, middle school, high school, just every area, because I think, other communities, they have that, they have a private school, they have the GMAT, they have the SAT preparation starting all the way from 9th grade. We typically do that to 11th grade. So, things like that, I think it makes a difference.
It does make a difference. I totally agree. It makes it, and then the conversations that they have at their dinner tables are different too.
That is a great point. Versus, I would get looked at crazy if I bring up anything finance. Even if I'm in that financial planning industry, they don't, it's just not something they want to talk about.
Right. But you have to talk about it. So yeah.
Right.
I know I have a granddaughter, and I recently, we've been talking about getting a pool and stuff like that. And so I told her that I put my car on Turo. And that was the reason for me putting my car on Turo.
Wow.
Just to generate some passive income. But my plan is to make her manage it. So we went out one day, we were looking for, cars and stuff. And I had her looking at it and talk about it. And she's like, oh, well, you have to put it in a separate bank account. So I have the bank account and everything. And I'm going to make her manage it. I'm going to make her sit there and look at it and see what's going on with it, because that's how I learned. I used to balance my mother's checkbook when I was like 10 or 12 years old,
That's cool.
Yeah.
Like you learn by experience, though. That's
learn
great.
by experience. And then you get that mindset. And that's what we have to do. We have to put our kids and the younger generation in that environment to get that mindset.
The hardest part is if the parents are, in that mindset or have their things together, how can they, go on and teach the kids?
Right. So we have to talk to them all, huh? We have to hit it at all.
Every angle. All the way from retirees to freshborn babies. You just have to.
So very cool. Well, is there anything that you want to leave with the audience? Any gems that you want to drop before closing?
I think the last gem I will leave is for, I think the biggest thing is individuals nowadays are looking for ways to retire early before age 59, and they really don't know how.
Wow.
So I would say the biggest gem I will leave for that is the two accounts that I would recommend is going to be the Roth account and then any kind of brokerage or investment account. I feel like those two will be your tools to retire early until, your traditional retirement accounts kick in. So I would say definitely helping people get in the mindset of you want to have all three buckets of money. You don't want to just have, let me contribute to my 401k plan at work and that's it for retirement. You want to have pre-tax, post-tax, and taxable. which taxable is just capital gains tax accounts. So I always recommend you want 3 buckets. So in retirement, you have different buckets to pull from, so you can almost manipulate your tax bracket during retirement, which everything is based on that. Your Social Security taxability is based on that. Your Medicare premium is based on that. So you want to be able to manipulate it to what you want it to be at.
That was a bar.
Yeah, that was a bar. All about not tricking the system, but just strategic.
I love that. 3 buckets. Yes, I love it. I'm gonna pull out all my documents and send it to you.
Have to.
I told you 5 more years.
5 more and you're out.
Then I'm traveling. I'm out. I'm just hanging out with, doing what I want to do when I want to do it.
You have to enjoy life while you can, right? It's like you got to balance it. You can't be too serious, saving where you're not enjoying either.
Right. And then you don't, like you said, you don't want to get to the point where you can't. So. Awesome. Well, Jovan, that was, oh my goodness.
Thank you.
That's how you end the show. I like it. So
thank you.
Thank you so much for being on the CPA Lady podcast. You can find Jovan on LinkedIn, Jovan Johnson, on Instagram at Piece of Wealth Planning, and also on Facebook at Piece of Wealth. And on the internet, of course, at www.pieceofwealthplanning.com. So thank you again. I'm Marjorie McPike. You can catch me on Instagram at MLMCPA, and you can also watch this on YouTube, and please subscribe to my podcast, and we will see you next time. Thank you.